What is going on, everybody? Welcome back to another video. We're doing technical analysis tonight. Free YouTube video technical analysis coming at you. So we're going to be talking about inversion fair value gaps. Obviously, this is my entry criteria. You know, if you've been watching the channel for a bit, you know that I always enter off of inversion fair value gaps on lower time frames. But what about inversion fair value gaps on higher time frames, like the 5, 15, 30, 1 hour, 4 hour daily? How can they be used, and do I use them? And of course, the answer is yes, I do. And this is why the inversions are so important on the higher time frame. We're going to recap today because it was a perfect example of it, all right? So what do I use inversions on the higher time frame for? Two reasons. The first one being bias, and the second one being continuation confirmation. So let's go over bias first. When I come into the market at 9:15 in the morning and I do my pre-market analysis and I try to figure out, all right, you know, what happened the night before, what's our bias coming in, I want to see what gaps are we respecting and what gaps are we disrespecting on the higher time frame. So for example, coming into today, before this whole move happened, we were respecting this 4 hour fair value gap, right? And obviously, you know, we had a lot of other gaps below, like this one, and then with this low inside of it, etc. You go on the hourly time frame, you know, this is around where we opened. What are we doing, right? I always say, what are we respecting, what are we disrespecting? At open, we're respecting this fair value gap to the downside. And look at this, what do we see over here? We see two bullish fair value gaps that are getting inverse to the downside. As you can see, this candle closed below it. So this is super important because obviously most of my trades, I'm going to be like, all right, what are we respecting on the higher time frame? Are we sweeping liquidity or are we respecting a fair value gap? Like, that's always the basis for my trades. But if we are inversing on the higher time frame, then I'm always going to be like, okay, now I know that order flow is flipping. Because when I take an entry off an inverse, I say, okay, order flow is flipping bullish right now. And then on the higher time frames, it's the same thing, just order flow is going to flip bearish in the next, you know, however many minutes, hours, days, etc. So when I come into market open this morning and I see we are inversing gaps to the downside on the hourly, then I'm like, okay, there is a chance that if we could push below this 4 hour that we're respecting and start to get under it, then we're going to inverse it to the downside. So that's the first step, all right? The inverses on the higher time frame can give you your bias. So I'm inversing on the 1 hour, and if we could get below here and start inversing this 4 hour, then I'm like, wow, we're bearish as fuck. And what happens right at open? As you can see, we immediately push down below the 4 hour gap. And what happens? We just continue to sell off, as you can see. And now this is where it gets interesting. How do we use inverse fair value gaps for continuation trades? Well, we got our bias on the higher time frame. Now if we go to that medium time frame, we could see, all right, what do we have? We have a 15-minute low getting swept, and we have a 30-minute gap right here. So what do I want to see from the first 30 minutes of open? Since we have this 30-minute gap, I want to see this get closed through on that intermediate time frame, so I can say, okay, now we have confirmation. We had our bias that it was bearish, and now we're getting confirmation on these intermediate time frames that we're selling off right now. So now I say I have confirmation to take a continuation trade, because if we're inversing all these gaps to the downside, more likely than not, we're just going to continue to keep on selling off. You know, we're not going to inverse an hourly or a 4 hour to the downside and then just reverse out of nowhere, right? So I want to see us get a continuation trade. And how do I take my continuation trades? If you've been watching, you know I look for 5 or 15-minute retraces. So let's wait. When do we get a 5-minute gap retrace? As you can see, we just keep selling off. What do you notice here? We've inversed the 30, and we've shifted structure. So these gaps can also work kind of like how lows and highs work. On the 30-minute, not only did we close below this gap, but we also closed below this low, which is giving me that continuation confirmation. We got our bias, 1 hour got inverse, so we're like, all right, we're probably going to be bearish. And now we're seeing, okay, we're bearish right now. Our order flow is bearish as fuck because we're closing through bullish order flow gaps. So now I want my retrace. When am I going to get a retrace? Well, let's see. When do we touch a 5 minute? boom, right here. So as soon as we touch this 5 minute, I'm saying to myself, I want to take a trade off this 5 minute. So what did I do? There's the 5 minute getting tapped into, as you can see. It was actually my bad. Draw that so it. There we go. So we tap that 5 minute. What do we do as we tap that 5 minute? As you can see, this candle is higher than these, but that's not the case over here. Very, very small SMT to see. Not gonna lie, but you know, internal SMT inside of the gap. What do we get? A 30-second inverse on the lower time frame. So now we've used 3 sets of inverses for this trade. We had the higher time frame, like the hourly, where we saw before the market opened that we were closing below and disrespecting hourly bullish gaps. That gave us a bearish bias. Then on the 30-minute, the intermediate time frame, we saw, okay, order flow is flipping bearish in this session right now. So we want to look for the most immediate continuation possible, because it's clear we're going to be bearish for at least another 30 minutes probably, right? Because if you inverse a 30-minute gap to the downside, that next candle is probably going to continue. So in the next 30 minutes, whatever, I want to see us get an entry. And that continues to the downside and continues our trend. And now, the last step, we finally get our retrace into that 5 or 15-minute gap, and now we've gone to our lower time frame. We've taken the trade, or we've gotten our entry, that inverse on the lower time frame. And now we can say to ourselves, all right, I'm going to put my stop above the high of the S&T, and I'm going to target a 1-to-1, and that's what we do. All right, so that's why, and this was the trade I took today on the stream. Pretty simple, pretty easy, very easy continuation trade. And I knew that this trade was going to be high probability because we were inversing gaps on every single time frame. So that's the importance of using inverses on different time frames, because it stacks your narrative. I always say, try to tell a story with your trades and try to predict the trades before they happen. And, you know, this is a obvious sign of that. I marked this 5 minute out, and I actually tried to long to this 5 minute just in case we would end up disrespecting it and finally getting a reversal. And obviously I got break even as soon as we touched it and got this reaction off of it. I literally got out of a long and went right into the short because I was finally getting my retrace that I was looking for all morning. So yeah, that's just it. You know, you want to wait for that bias to get fulfilled. You want to wait for those continuation setups to occur. And then when we retrace and we get that reaction, you enter and you bank. All right, it's as simple as that. Using iFVG's on 3 different time frames could get you bias, could get you confirmation, and then could get you your entry. All right, see you guys.